Hey everyone, and welcome back to the channel. Let's talk about that feeling. That feeling of standing still while everything around you seems to be moving at 100 miles an hour. In a crypto market, this feeling is all too common. You see Bitcoin chop sideways for weeks, maybe even months. The excitement fades, the headlines get quiet, and you start to wonder, is this it? Is the bull run over before it even began? But what if I told you that this quiet period, this consolidation, is not an ending? What if it's the most critical phase of the entire market cycle? What if, behind the curtain of Bitcoin's sideways price action, a massive, silent shift of capital is taking place? This isn't just speculation. This is a well-documented phenomenon known as the Great Crypto Rotation. And it's where the smart money, the institutional funds, and the veteran investors are quietly positioning themselves for the next explosive leg up. Today, we are pulling back that curtain. We're not just going to talk about which coin might pump next. We are going deep into the mechanics of this rotation, analyzing the data and identifying the exact narratives and sectors that are attracting billions in capital right now. This is the Great Crypto Rotation, where the smart money is going. Now, before we dive into the alpha, let's get the essential disclaimer out of the way. I am not a financial advisor. This video is for informational and educational purposes only. The cryptocurrency market is extremely volatile and carries significant risk. You should always do your own extensive research and consult with a qualified professional before making any investment decisions. Your capital is your responsibility. Alright, with that said, let's set the stage. To understand where we're going, we first need to understand where we are right now. Let's summarize the current market sentiment. If you were to ask 10 different analysts, you'd likely get 10 different answers, but the general consensus leans towards a state of cautious optimism, or what we might call a bullish neutral sentiment. Here's why. Bitcoin has had it having. This is a historically bullish event that reduces the new supply of Bitcoin, creating a supply shock. We've also seen the landmark approval of spot Bitcoin ETFs in the United States, which has unlocked a fire hose of institutional capital that was previously sitting on the sidelines. These are fundamentally bullish, long-term catalysts. However, in the short to medium term, we're facing headwinds. Macroeconomic uncertainty, questions about interest rate cuts, and regulatory chatter all contribute to a market that seems hesitant to break out to new all-time highs and stay there. This creates the perfect environment for what we're seeing right now, a prolonged period of consolidation. Bitcoin's price is coiling, trading within a defined range. For the impatient investor, this is frustrating. But for the smart money, this is opportunity. This is the accumulation phase. And more importantly, it's the phase where the Great Rotation begins. So, what exactly is this rotation? Imagine the crypto market as a giant ecosystem of capital. Bitcoin is the sun, the primary source of energy and value. When new, significant capital enters a crypto market, especially from large institutions, it almost always flows into Bitcoin first. It's the most established, most liquid, and most understood asset. This is why, at the beginning of a bull market, Bitcoin's price often moves first and most aggressively. We see its market dominance, or its percentage of the total crypto market cap, rise significantly. But that capital doesn't just stay in Bitcoin forever. Once Bitcoin has had its major run and begins to consolidate, investors start looking for higher returns. The risk appetite increases. They look at their Bitcoin gains and think, where can I deploy this capital to potentially get a 5x, 10x, or even 100x return? This is the start of the rotation. Capital begins to flow out of Bitcoin and into the next largest and most established asset, Ethereum. Ethereum, with its vast ecosystem of decentralized applications, acts as the primary gateway to the wider altcoin market. So, we typically see the ETH/BTC pair start to strengthen, signaling that Ethereum is outperforming Bitcoin. After Ethereum has its run, the rotation continues down the risk curve. The capital then flows from Ethereum into other large cap altcoins. These are the established projects in the top 20 or top 50 by market cap. Think projects like Solana, Avalanche, or Chainlink from past cycles. They are seen as relatively safer bets within the altcoin space. Once the large caps become saturated and their growth potential seems more limited, the money gets even more adventurous. It rotates into mid-cap and small-cap coins. These are the higher risk, higher reward plays, often tied to new and emerging narratives. And finally, at the peak of market euphoria, you see the last stage of the rotation, capital flowing into micro caps and meme coins, where speculation is rampant and fundamentals are often an afterthought. Understanding this waterfall of capital is the single most important concept for navigating an altcoin season. The key is not to chase the final stage, but to identify where the water is flowing asterisk before asterisk it becomes a raging river. So, the billion-dollar question is, where is that smart money flowing right now, during this Bitcoin consolidation phase? It's not flowing randomly. It's flowing into specific, powerful narratives that have the potential to define the next decade of crypto innovation. Let's break down the 4 biggest narratives attracting smart money today. The first, and perhaps the most explosive, is the convergence of artificial intelligence and crypto. AI is the defining technology of our time, but centralized AI models controlled by a handful of tech giants come with significant problems: censorship, bias, data privacy issues, and immense computational costs. The crypto world is proposing a solution to centralized AI. Smart money is pouring into projects building the three core pillars of this new paradigm. Pillar 1 is decentralized compute. Training large AI models requires an astronomical amount of GPU power, which is expensive and scarce. Crypto projects in this space are creating a permissionless marketplace where anyone, from large data centers to individuals with a powerful gaming PC, can rent out their unused computational power. Think of it as an airdrop for GPUs. This drastically lowers the cost of AI training and democratizes access to the tools needed to build the next generation of AI. Pillar 2 is decentralized data and verification. AI models are only as good as the data they are trained on. Centralized models often scrape data without permission and can be fed biased or malicious information. Blockchain projects are creating systems for verifying the provenance of data, ensuring it's authentic and untampered, and creating new models where users can own and monetize their data, getting paid when it's used to train AI. Pillar 3 is decentralized AI agents. This is where it gets truly futuristic. These are autonomous AI programs that live on the blockchain, capable of owning their own crypto wallets, executing smart contracts, and performing complex tasks on behalf of users. Imagine an AI agent that automatically scours DeFi protocols for the best yield, moves your funds, and pays the gas fees for you, all while you sleep. Venture capital is betting big that the fusion of AI and crypto will be one of the most significant wealth-generating events of the next cycle. The second major narrative is real-world assets, RWA. If AI is the explosive, high-tech narrative, RWA is the professional, grown-up narrative that is capturing the attention of the world's largest financial institutions, like BlackRock and Franklin Templeton. The concept is simple but profound, taking tangible, off-chain assets and representing them as tokens on a blockchain. What kind of assets? Anything. Stocks, bonds, real estate, private equity, carbon credits, even fine art and luxury watches. Why would we do this? The benefits are immense. Tokenization creates unprecedented liquidity for traditionally illiquid assets. Imagine being able to sell a 1% stake in a skyscraper in Tokyo as easily as you sell a stock. It enables fractional ownership, allowing smaller investors to gain exposure to high-value assets they were previously locked out of. It drastically reduces administrative overhead and settlement times. Instead of a multi-day process involving lawyers, brokers, and custodians, a real estate transfer could settle in seconds via a smart contract. And it creates a new on-chain financial primitive. These tokenized RWAs can then be used as collateral in DeFi lending protocols, creating a bridge between the trillions of dollars in traditional finance and the innovative world of decentralized finance. This isn't a maybe scenario. It's happening now. Major banks and asset managers are actively running pilot programs and building the infrastructure to bring trillions of dollars of real-world assets on-chain. This is the narrative that brings legitimacy and a nearly endless supply of value to the crypto ecosystem. The third narrative, which is a bit more niche but incredibly powerful, is DePIN, Decentralized Physical Infrastructure Networks. DePIN is the idea of using crypto tokens as an incentive to build out real-world physical infrastructure. Think about it. How does a major telecom company build a 5G network? It spends billions of dollars on towers, permits, and hardware, a massive upfront cost. A DePIN project flips this model on its head. Instead of one company building everything, a DePIN project creates a protocol that rewards individuals and small businesses for contributing to the network. For example, a project building a decentralized wireless network might reward you in their native token for running a small hotspot in your home. A project building a decentralized mapping service, like a crypto version of Google Street View, might reward you for driving around with a special dashcam. A project building a decentralized energy grid might reward you for adding your solar panels' excess energy to the network. By crowdsourcing the infrastructure, DePIN projects can build out massive, global networks at a fraction of the cost and at a speed that centralized companies could only dream of. This is a direct economic attack on some of the largest, most entrenched monopolies in the world, from telecoms to energy to cloud storage. Smart money loves this because it's a tangible, real-world application of crypto that solves a clear economic problem. Finally, the fourth narrative is the evolution of crypto gaming, or GameFi 2.0. The last bull run gave us the first wave of crypto gaming with play to earn. The idea was revolutionary, but the execution was often flawed. Many games were simple, not very fun, and had unsustainable economies that relied on a constant influx of new players. They were more earn than play. The smart money is now backing the next generation. GameFi 2.0 is focused on play asterisk and asterisk going. The focus is on building high-quality, genuinely fun games, the kind of AA titles you'd find on PlayStation or PC that just happen to use blockchain technology to give players true ownership of their in-game assets. Imagine spending hundreds of hours leveling up a character or finding a rare sword in your favorite RPG. In the traditional gaming world, that asset is trapped inside the game's walled garden. You don't actually own it. In GameFi 2.0, that sword is an NFT in your wallet. You can sell it on an open marketplace, trade it with other players, or even use it in a different game build on the same ecosystem. Venture capitalists are pouring hundreds of millions into studios led by veteran game developers from major companies like Blizzard, Riot, and EA. They understand that the global gaming market is worth hundreds of billions of dollars, and the first company to crack the code of a truly fun, sustainable, blockchain-integrated game will be a titan of the industry. So, we have AI, real-world assets, DePIN, and gaming. These are the powerful currents of capital flowing beneath the surface. But how do we know when the rotation into these altcoin narratives is truly beginning? This is where we need to put on our analyst hats and look at the charts. This isn't about predicting prices, it's about reading the flow of capital. There are 3 key charts you must have on your dashboard. The first, and most important, is Bitcoin dominance, or BTC-D. This chart doesn't show the price of Bitcoin. It shows Bitcoin's market capitalization as a percentage of the total crypto market capitalization. When BTC-D is rising, it means capital is flowing into Bitcoin faster than it's flowing into altcoins. This is typical at the start of a bull market. When BTC-D is falling, it means altcoins, as a group, are outperforming Bitcoin. This is the classic sign of an alt season and the great rotation in full swing. Right now, if we look at the BTC-D chart, we can see it has been in a strong uptrend for over a year. However, it is currently approaching a major, multi-year resistance level. This is a historical ceiling where, in past cycles, the dominance has peaked and started to reverse, kicking off a massive flow of capital into altcoins. A firm rejection from this resistance level, followed by a break in its market structure, meaning it starts to form lower highs and lower lows, would be the most powerful confirmation we could get that the rotation is beginning in earnest. The second critical chart is the Ethereum/Bitcoin pair, or ETH/BTC. This chart measures the value of Ethereum relative to Bitcoin. When the chart is going up, Ethereum is outperforming Bitcoin. When it's going down, Bitcoin is outperforming. Because Ethereum is the king of altcoins and the primary platform for DeFi, NFT, and most new token launches, its strength is a bellwether for the entire altcoin market. A strong, sustained breakout in the ETH/BTC chart often acts as the starting gun for alt season. For months, this pair has been in a downtrend, bleeding out as capital favored Bitcoin. However, we are seeing it form a potential bottoming pattern at a key long-term support level. If we see ETH/BTC start to reclaim key moving averages, like the 50-day and 200-day, and break out of its current range, that would be a very strong signal that the first stage of the rotation from Bitcoin to Ethereum is underway. The third and final chart is the TOTA L3 chart. This chart shows the total market capitalization of all cryptocurrencies except for Bitcoin and Ethereum. In other words, it is a direct measure of the health of the altcoin market. This chart gives us a pure and adulterated view of the capital flowing into the narratives we just discussed: AI, RWA, DePIN, gaming, and more. By applying basic technical analysis to this chart, we can identify key support and resistance levels. A breakout above a major resistance level on the TOTA L3 chart would signify that a broad-based altcoin rally is beginning. It tells us that new money is flowing in and traders are confident enough to move down the risk curve. Watching these 3 charts in conjunction provides a powerful, multifaceted view of the market's internal dynamics. BTC-D tells us if the king is weakening. ETH/BTC tells us if the queen is ready to lead the charge. And TOTA L3 tells us if the army of altcoins is ready to march. So let's bring it all together. What is our forward-looking statement? The evidence strongly suggests that we are in the late stages of the Bitcoin dominant phase of this market cycle. We are on the cusp of the great rotation. The consolidation of Bitcoin, coupled with its dominance chart hitting a critical resistance level, is creating the perfect setup for capital to begin its journey down the risk curve. Smart money is not waiting. Venture capital and institutional funds are already deploying billions into the foundational narratives of the future: the intelligence of decentralized AI, the stability of real-world assets, the disruptive power of DePIN, and the mass market appeal of high-quality crypto gaming. This does not mean you should blindly throw money at any coin with AI in its name. The opposite is true. This is the time for diligent research. This is the time to learn. Your task, if you choose to accept it, is to dive deep into these narratives. Understand which projects are building real technology, which have strong teams, sound tokenomics, and an active community. Learn to read the 3 charts we discussed. Use them as your compass to navigate the shifting tides of the market. Remember, the goal is not to perfectly time the top or bottom. The goal is to identify the direction of the flow and position yourself to ride the wave. The coming months will likely be defined not by Bitcoin's price action, but by the explosive growth of these new ecosystems. The Great Rotation is a period of immense opportunity, but it also carries risk. The market can be irrational. Macroeconomic events can shift sentiment in an instant. Always have a plan. Understand your risk tolerance. Don't invest more than you can afford to lose. And most importantly, focus on the signal, not the noise. The noise is the daily price fluctuations and the fear-mongering headlines. The signal is the flow of capital, the growth of developer activity, and the strength of the underlying narratives. The smart money is focused on the signal. The question is, are you? Thank you so much for joining me on this deep dive today. I hope this has provided you with a clear framework for understanding the incredible shift that's happening in the crypto market. If you found value in this analysis, do me a huge favor and hit that like button. It really helps the channel grow. And if you want to stay ahead of the curve on these market-defining trends, make sure you subscribe and hit the notification bell so you don't miss our future updates. Now I want to hear from you. Which narrative are you most bullish on? Is it AI, RWA, DePIN gaming, or something else entirely? Drop your thoughts in the comments section below. I read every single one. Until next time, stay curious, stay informed, and navigate wisely. After our music fades in,